All right, what's going on, everybody? Chris Friggs with Texas West Capital. It is I'm just running a little bit late here after 11 a.m. Central Standard Time here on Friday, the 6th of June, 2025. As you might be able to hear, I think my voice is losing it here. Not because I'm sick, but I think because the allergies, the weather change, and all that in this area. So we're gonna try and make it through. Would have been nice if Fibbo could have made it today, since he can do most of the talking, but unfortunately he got called into work, and so he can't actually, stream from work. But you might see him show up in the comments there. Got stuff to talk about today. We got the jobs number. I want to talk to you about why I think now may be a good time to really start considering alts. And then we'll take a look, of course, at Bitcoin and what's going on there. I'm not sure I'll be able to make it a full hour and a half today because of my voice, but we're going to try. Do me a favor, hit the thumbs up, hit the like, hit the follow, hit the subscribe. And really, I would appreciate if you could share the link, guys. You guys know I'm awful at marketing. I don't really put a lot of effort into marketing. I just kind of do the job. I get in here, I'm good at trading, and I teach people how to do that. And so, hopefully, I think most of y'all get that. We've had a few different people joining here recently, and they seem to be liking things pretty well. The coursework and everything in the site. We're also trialing. I've been training in AI on my trading. So the things that I know about markets and how I understand markets and things like that. And so that AI is using that knowledge along with momentum kind of things that are going on to find potential trades, 3 stocks and 3 crypto every day that have a good likelihood of breaking out, of moving. And so we're just starting to trial that a little bit. I think I've still got to make some tweaks on it, but we're putting out there so our members can check that out. But anyway, again, I want to mention that the price is going up. And so I just want to keep saying this for those that are missing it. If you're already in at the $97 a month, as long as you keep auto renewing on that, the platform will continue to just charge the $97 a month. Anybody coming in after, I think it's going to be Mondays when the price is going to go up to $179 a month, still gets us at the bottom end of our competitors. So we've been really, really underpriced, especially for what we do, for a very long time. And so we're just going to try and get it up there where our competitors are. But if you happen to want to jump in on a monthly or whatever, do it before Monday. And that way you can lock in the $97 there a month. We also still have some seats left. I did 20 annuals for basically $553. So that's like I don't even know what it was, like $46 a month or something like that. Something like that. Anyway, but yeah, you can get that if you go to members.texaswestcapital.com and then use the promo code SUMMER2025. So you can do that. If you're currently on a monthly and you want to switch that, you have to send me a DM because I have to actually cancel your account. It'll prorate you what you have left on your month, and then you can join with the other thing. The platform is still working on getting you guys to be able to upgrade on your own with the promo codes, but right now you can't do that. So we have to do this extra step. Anyway, so that kind of some of the housekeeping there. Real quick, if you haven't yet, I've got a lot of different ways, guys, where I try to get information out for y'all, try to get you out with some knowledge and analysis of markets and stuff like that, okay? Bernardo. Okay, send me an email, Bernardo. My name, Christopher Inks, or Christopher.inks@texaswestcapital.com. Send me an email there. And I'll get you. Well, if you're off the platform right now, actually, Bernardo, you could just go right into it. You can just go to members.texaswestcapital.com and purchase the annual. Yeah. And so summer 2025 will get you that. Yeah. Jump on it, guys. Once the 20 are up, the platform will not allow that promo code anymore. So if you want to do it, get in while you can. Like I said, if you just want a monthly, you can still get it for $97 a month right now through Sunday night probably. Sometime Monday morning, it'll go up to that 179. But yeah, so anyway, just housekeeping stuff there. But like I said, I also try and get information out for y'all. Social media, I'm finding, is becoming more and more difficult for me getting out there. So what I've got is I've got a few newsletters that you guys can sign up for free. Okay. So let me pull them up here real quick. If you don't know yet, you can go to themarketbreakdown.com. This is my Monday through Friday newsletter. It's a market analysis every day. Gives you a concept that you can learn every day in it as well. Risk flows, all this kind of stuff. It's really great. But you can jump in for that. I also finally launched the Applied Socioeconomic Theory newsletter not too long ago, just within the last month. So this goes out every Friday. So the new one's going to go out today, a little bit later today. And it's socioeconomictheory.substack.com. And then finally, this is my newest one, Trader's Edge Daily. And like it says here, one actionable trading insight delivered in 60 seconds each day to sharpen your edge and risk discipline. So basically, it's one thought I have every day that can help you as a trader. And you can read it in less than 60 seconds. It's got a little a mini action item that you can do as well to help you with it. But this comes out every morning, I think around 7 o'clock in the morning or so. It gets sent out, my time, Central. But anyway, they're all free. You can jump on them. The Market Breakdown does have a paid side to it. Every Saturday, we release 5 crypto and 5 stock trades, high confidence trades. You've got the entry, the stop loss, the exit. And then on Wednesdays, we do a risk. We send out another one on Wednesdays, which is our risk check. And it kind of updates the positioning on all those, on what's going and what's not, what's still pending and all that. So you can jump on that as well, but you don't have to. We do have the free side, which has a whole bunch of, the market analysis stuff. And then again, Applied Socioeconomic Theory and Trader's Edge also there. So get signed up on them, guys. If you're serious about learning how to trade, there's very few really good, free information out there, and I'm trying to kind of put some of that in there. So, excuse me, Bernardo, if you want to pay via crypto, we can do that since it's the annual. Send me an email. So, Christopher.inks@texaswestcapital.com, and I'll get you your email today, man. And I'll give you a thing to do. It's just the platform doesn't accept crypto, so I have to keep up with it manually. So I can't do crypto payments like every month. I'll go nuts trying to keep up with it. But if you do an annual, guys, and you want to pay in crypto, you want to pay in USDC or USDT, we can do that. I'll do that because then I only have to think about it once a year. Anyway, so that's all that right there, guys. Oh, wrong one there. There we go. All right. So today we had the jobs numbers came out, right? And let me see. What did we do? We had like 139,000 jobs. They were expecting about 127 or 130,000, depending on where you look. But basically, so a little bit better than that. We had more jobs, than was expected. The unemployment rate was 4.2% the previous month. It was expected to remain 4.2% this month, and it did. By the way, just as a reminder, 4.2% is historically at the very low range, guys. A full the government considers the economy to be fully employed at around 5 to 6%. So 4.2% is still significantly lower than what they even expect for to be considered full, right? But nonetheless, it is kind of drifting up from the 3.8 or whatever it was, months ago. It is kind of drifting up. So, I wouldn't be surprised to see us, again, topping out with the markets here the end of this year, the beginning of next year. And I've been talking about that for a while. So, if we see unemployment continuing to trickle up a bit by bit, which, by the way, if you want the Fed to cut interest rates, really at the rate we're going, they're going to have to see that, right? they're going to have to see those jobs starting to come up, because everything else is looking pretty decent for the most part. As far as jobs, the rest of the information goes today. Average hourly earnings, which is another thing the Fed watches, rose by 0.4%. So more than what they expected, to $36.24 an hour, which marks a 3.9% increase over the past year. So, people are on average getting paid more, is what that's saying, right? As far as where the jobs went, there's been a lot of yakking about it, over the last 2 years or whatever. Oh, the government, all the jobs that are coming in are going to government. Well, if you've been paying attention here this year, not so much, right? The government's reducing the workforce. And so healthcare was the biggest jobs leader this time. They had 62,000 new positions, particularly in hospitals, which was about 30,000, and then ambulatory services, which was about 29,000. Leisure and hospitality came in second. They added about 48,000 jobs, mainly in food services and drinking places, which was 30,000. Social assistance increased by 16,000 jobs. So, growth in individual and family services. And then the federal government, as I was mentioning at the beginning, they had a decline of 22,000 jobs. So you like to see this. When you see jobs come in, you like to see it going to the private side and not to the public side, right? You like to see the job growth happening with the private companies and not so much with the federal government. So, again, decline of 22,000 jobs continues that trend of workforce reductions there for the federal government, okay? If you're looking at other major industries like manufacturing, construction, retail, little change to unemployment or to employment levels there. Our labor force participation rate dipped to about 62.4%. With a notable reduction of 625,000 workers from the labor force. And so, we've got kind of like this mixed bag of what's coming on with the information there. But right now we could probably say it's cautious. I can't even say the word. Cautiously resilient the labor market is right now. Even amid all these, economic uncertainties we have with Trump and tariff on, tariff off, tariff on. I think he's like Mr. Miyagi, tariff on, tariff off, tariff on, tariff off, right? If you got that joke, I appreciate you a lot. But yeah, so, we've got everybody kind of looking at the Fed getting us our first rate cut coming up here maybe in September. And I still think that's a good possibility, but, it'll be helped if we could start seeing seeing the unemployment go up a bit. That would help that for sure. You guys got it. I'm glad. I don't feel so weird saying it. Sometimes I'll say something off the top of my head, and it's funny in my head, and then I'll get out here and it's like birds, or like crickets, chirp, chirp, whatever crickets do. They don't chirp. Birds chirp, right? Anyway, guys, it's hard being me sometimes. Let me see here. So let's kind of jump on some charts here. Let me see. We'll do that. All right. You got to laugh at it, Kyle? Glad, man. I see Troy got it. Peter got it. Glad you guys did. Let's jump over here and see what's going on. Let me set this up a little better here. It's a little better. There we are with Bitcoin. So what I've been talking to our students about is this idea that, we were down here and we were going to be really cautious if we drop below this 102,085, basically 102,000 area, because that would signal a likely drop below 100,762, this swing low over here, right? Now, we needed an impulsive breakdown and close below it, which we didn't get. All we did was we got a sweep of that low and a nice slingshot rally right back up, right? Pay attention. This is just a low volume node, guys. We hit the top of that low volume node. Boom, popped right back up. So at this point, what we're saying is, okay, If we get rejected at this weekly pivot, which on this chart is 106,526, if we can get rejected there and come on back down here, that's going to increase the likelihood that we're going to continue down here toward about 96,000. Okay. Which just, before y'all freak out, it just gets us right here, this previous, support here kind of area, right? I mean, you can see all we do is basically dip through the low volume node into the higher volume node area, grab some bids there because the higher volume node should work as a support, pop us right back up through there. So if we're getting down here, the odds are we'll probably run pretty quickly back up through the low volume node here, okay? But if we can get an impulsive, like a 4-hour candle impulsive breakout and close above this weekly pivot at this 106,526 area, that's going to have us leaning toward this idea that we're going to rally up and break out higher. Based on the height of this pullback right here, that gives us a pattern target of about $119,809. So that's really what I'm looking at right here. I mean, that's as simplified as it gets there. And so, again, as this has been pulling back, we've been, cautious about it, looking for potential reversals, but always needing the breakout above the confirmation levels, which we hadn't gotten. So, the breakdown here gave us the sweep of the low here and this, again, this slingshot back up. And so we want to see, can we get that breakout here and that head up lower? You can see all this volume coming in on this drop down into this rally. You see, we've got all this volume compared to all the volume we had previously. Matter of fact, the only time the volume's been around this high was back over here, right as it was getting ready to take, right before we're getting that last move up. So this is a lot of demand coming in right here. So I like the way it looks. I like the idea of it hanging, of it finding support at 100,000. I would love to buy at 96, I'll be honest with you. But structurally, I like it finding support around 100,000. I've been talking about a while here, about how we get this move up here, and then the likelihood is that 100,000 holds a support. And so right now it is. We'll see if it continues on there. Let me see here. What do I think about being able to, this sounds like it would be a good question here. What do I think about being able to borrow against ETFs and actual Bitcoin will do for a potential drawdowns? It's going to have to mean dramatically less selling, right? Just like in general. We have to think, well, it could, right? Because people would borrow against it. I think that's the idea you're saying, right? So people would have the option to borrow against it instead of selling. And yeah, your first thought is that would probably be what would happen. I don't think, and here's the thing. The sad thing about that is most retail will use that ability to buy junk, right? They'll buy depreciating assets. Some we talked about on Beards and Bitcoin on Wednesday, is this idea that we've got this ability here, but in general, when it comes to borrowing money, it should always be to buy cash flowing assets or assets that are going to rise in value, right? It's the only reason you should borrow money. But most retail, most just human beings, right? They borrow money so they can look or feel rich, right? They borrow money for vacations. They borrow money for that Gucci purse. They borrow money for the Rolex watch. They borrow money for the over-expensive car, right? And so what's really interesting is for most people, when you talk about middle class, they're trying to look rich. Whereas most that people would consider are rich, I'm not saying like you're billionaires and whatever, but just, people would consider rich, often don't do that same thing. And what I mean is comparatively, right? So when you're middle class, you're usually living above your means. You're usually trying to live above your means, and that becomes the whole borrowing thing, right? Whereas, a lot of times, much more likely when you're wealthier, when you're richer, right? You're just kind of living in your means, right? It doesn't mean, you won't have more expenses. You're going to have more expenses, but you're not trying to look wealthier than what you are because you're kind of already there, right? Does that make sense? So when we look at that, I think the big thing about borrowing against the the ETFs will be for where we'll see what you're talking about there. I think is when you have your bigger ones, when you have things like funds or something that are borrowing against their ETFs, or companies borrowing against their ETFs, maybe if they're going to do that. That's where I think we're going to see the biggest bit for that. And yeah, so but is that would they normally be selling if they're borrowing to that type of person? It's a little different, right? If they're going to sell, they're going to sell. They're not going to borrow against it. So I think when you're thinking the way that you are, retail borrowing would be to again to get money for junk and depreciating assets, stuff like that, which really puts them in a bit in a bad position. But the ones who would make a lot more difference, the bigger players, for the most part, I think generally aren't going to borrow against their ETFs, right? Their Bitcoin ETFs. So here's the interesting thing about this. As you see these loans start coming out, not just ETFs and financial products like that, but also when you're borrowing against actual Bitcoin itself, the real purpose of these things is this idea that the person doing the borrowing is likely to get into trouble and not be able to pay back. And so then that bank or that company can then get a hold of that Bitcoin, right? I think that's the better way to think about it, especially if you're retail. But I don't think necessarily that this idea of being able to borrow against your ETFs is really going to, necessarily kind of keep the drawdowns from being quite so big. I think the drawdowns in general right now are not as significant as they were previously, precisely because there's a constant bid, right? Everybody's interested now, or getting to that point where everybody's interested. So you have a lot more larger players who are able to scoop that up. Why doesn't price, with all these people buying all this Bitcoin, why doesn't it shoot up? Well, there's a couple of reasons for that. One is because really the biggest person kind of holding all this Bitcoin is Coinbase, right? And so if Coinbase just has to trade it, if they're custodying, Bitcoin, and they have one person they're custodying for it, sell it to another person who wants them to custody it, you're not going to see that reflected in the price because it's not going anywhere. It's just staying in their wallets, right? It's not going out onto the exchange and having to be bought and having to be sold and all that kind of stuff. It's just being, it's still in their wallet, right? It's just it's a book notation that now it belongs to player B, player A sold it, right? But the other thing is there's rehypothecation. There are all these things going on. Now, there was something with Jack Mallers over there at 21 Capital, and it was a few weeks ago that he made this video that said, hey, guess what? We will never rehypothecate the Bitcoin that we have. Fast forward to a week later, and somebody found their terms of service where it says, hey, you agree that it can be rehypothecated at any time. Now, it's a legalese thing, kind of protection for the company and whatnot. But, and I brought that up. It's funny. I brought that up in Wednesday's Beards and Bitcoin show. And then I think it was probably like an hour later or something, Mallers came out and said, hey, listen, we've changed that. It no longer says that in the terms of service anymore, in the loan paperwork anymore. So, apparently, 21 Capital, at least for now, isn't going to rehypothecate. But, there's all these things going on. When there's financialized products, guys, there's a lot of paper versions of that asset. And that leads to, things not necessarily working as you would expect it, when you would expect it to. But I guess what I'm saying is nobody's kind of scam you guys. Nobody's saying, oh my God, whatever. It's just that there are these things that happen when you get to this financialization of an asset. And, it just is what it is, right? Just because you understand or you say, okay, yeah, this is how a thing is, doesn't mean you have to agree with it. It just means it's a realization of, listen, this is how things go. And I think for Beards and Bitcoin, a lot of people get that wrong when they're watching us, because for the last year we've been doing the show, right? Just over a year now, or 13 months. And a lot of what we said is already starting to happen. Now, a lot of what we said was likely to happen is already starting to happen. Now, me and the guys, we've got, all of us, we got 20 plus, 30 plus years of experience in TradFi and crypto and markets and everything else. And so all we're doing on that show is we kind of say, listen, the odds are this is what's going to happen. Now, it's up to you to figure out what you want to do with that happening. Doesn't mean you have to like it. But if you want to be in the Bitcoin game, I think you have to understand what's likely to happen so that you can prepare yourself however it is. If you want to be straight on, Bitcoin maxi and all this financialization is bull, BS and all that, that's fine. You can feel that way. But don't ever allow your feelings keep you from protecting yourself against what's potentially going on, right? Now, some people are going to go and they go, this is great. I can get loans out. I can use the loans to buy cash-producing assets or income-producing assets or assets that are going to go up in value, and therefore I can use my Bitcoin without ever selling it to increase my net worth. And some people see that, and that's a great thing. And I don't necessarily think that's a bad thing either. But even if you're of the mind where, oh my God, this is nonsense, and how dare they do this, and this isn't what Bitcoin was made for, and all this stuff with the financialization, right? Even if you feel that way, and that's perfectly valid and perfectly good as well, you still have to understand what's going on so that you can protect yourself for whatever may be coming up, right? And I think that's the big point we try and make there on Beards and Bitcoin every week, is this idea of, okay, well, here's what's going on. And you can use it to your advantage here, but even if you don't choose to do that, at least understanding what's likely to happen here will keep you from being blindsided and ignoring what's going on, because that's where people usually screw it up. That they're so hell-bound intent on what they think needs to happen or how it should happen that they just write themselves out of any kind of, bettering their position on it all. And so, it's what we don't want you to do that. We'll give you the information, but what you do with it definitely becomes yours. So let me see here. If we get to 119, then where would the pullback take us from there? Well, with my kind of current count I've got going on here, let me see here. I think we'd be looking at right around 100,000 maybe. Let me see here. Yeah, right there around 100,000. So basically the same kind of area we're at. The idea for rallying up there is this is a 3 and this is a 4, and then this would be a 5. And then you'd have basically either a 1, 2, 3, 4, 5 here, or some other function that's in there. I mean, I would look generally at that 100,000 area first, but it really kind of depends on how this resolves higher here, or even if it does. Again, if it goes to 119, if we get rejected here though and it comes on down, well, things are different there, right? But if it does, continue from here and head up ultimately toward that 119, my first thought is around 100,000 is where we'd be looking. And then we'd work from there. Again, this idea that this 100,000, this is all this previous all-time high here. We've got, basically we've got a base being built here, right? So the idea is we come back and test that base and continue higher. That would be the idea. That would be just the general structural idea of what we tend to get when price is in a bullish trend higher. So yeah, that's what I would be looking for in that particular. Let me see here. Man, this is killing my throat. God, dog. Let me see here. Oh, Tesla. Tesla's an interesting one. So there's the spat going on with Elon and Trump, right? Such childishness. I mean, my God, people airing dirty laundry on social media. I mean, I thought it was something only us plebs did, but I guess not. Yeah, I've got a real aversion to that. But anyway, it looks like what we have here is potentially a 1 and a 2. And so yesterday in our Elliott Wave session at the Trading Academy, right? Somebody asked me about what I thought was going on here with Tesla. And we were up here, it hadn't closed for the day yet because our class is before it closes. And so I said, well, what it looks like to me is we've got 3 waves. It's a third wave down. It's a capitulation, huge bite of volume on that. It's at that, around that S1 support area. I said, I think that probably what we're going to get is a rally back up. I think that might be the end there. Capitulation here coming down right through the low volume node. Look for the move up. So we gapped up today. We closed yesterday. From the low yesterday, 273.21. We closed at 284.70. And then we opened today at 298.83. So, basically 280. Here we closed at 284.70, and then so basically about $14 or so on the open there. If we can break out about 355.40, that'll add confidence to that idea of what's happening there. The pullback, by the way, was also just beyond 50. Well, it comes to just beyond 50% here. If you're looking left, which I always teach our students to do, I mean, that's what you have there. Resistance, 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 support, resistance, support. Taking support there. I mean, this is a significant area. When you say significant support resistance level, this is what you're talking about. So I'm thinking what we have here probably is going to be a 1 and a 2 here. And that would give us a minimum expected wave 3 target around 656, 657, and 5 waves up around 807 is what I'm looking at right now. We got to get above that 355.40 though. But if you were, in our class yesterday and you said, man, yeah, I like the way that sounds. Let me kind of zoom in here. Yeah, and so, we were already coming up off that. By the time class was, we were right about, I guess we were right about here. No, it might have been the end. No, I think it was done actually. So it opened up today. So if you bought the open there, the gap up, stop loss right below the swing low there. Just to get up to the this all-time high up here, you're already at 2.72R. If you're thinking it's going to hit that 3 waves up, you're looking almost 14R, and then of course at that without any blow off top or anything, you're still looking at almost 20R. So for every dollar that you put in on that entry, you'd be looking to make $20. I mean, that's damn good. But anyway, so kind of looking at that, but we need the breakout. Overall, we need the breakout above 355.40 to add confidence to that idea of what's going on there. So kind of wanted to show that. SUI's another one we've been watching for quite a while now. A lot of our members are into it. And a lot of your charts are going to look like this right now. So the question is, why do I think that you should be looking at probably finding alt entries right now, okay? Because most of your charts, or significant portion of your alt charts, are going to look like this. 5 waves up, A, B, and then 1, 2, 3, 4, and it looks like 5 completed prior to the S1 pivot. Pretty close to or beyond the 50% retracement. I mean, it looks, like that's what it's ready to do, right? So what does that mean? Well, and we've almost reset on the daily RSI down there at the low. We got big volume at the swing low. Here we are building a bullish engulfing candle here for today. Coming up there. If we can break out above $3, 3.3945 here on this chart, SUI USD on Coinbase, that's at wave 4. That's going to signal that this low is probably in. Breakout above $4.20. That's going to add confidence to the count. And you're looking at a minimum expected wave 3 target up here at about $12. Oops, move that. $12.16. So, what you're going to see with a lot of these setups right now with alts is about a 300% price run on the breakout above their, well, I guess it'd be 200% higher, right? Off their breakout above their wave Bs. Well, it's a pretty good reason to be in, right? So for instance, if you were to get in, say right now, for here, what that means is by the time you're getting wave 3 up here, you'd be making about a 28R. So $28 for every dollar you risk here. So that's just an example of how you kind of look at this, right? So one thing I teach our students is start out on a large time frame, weekly, daily, even the 4-hour. Find those points of interest on those larger time frames. Where are your pivots, or where are your, if you're doing Elliott wave, where's your B wave, where's your wave 4, stuff like that. And then what you do is when you hit those levels, you zoom into a much smaller time frame, say the 15-minute, and you start looking for signs of a reversal at that if you're going up into it, or if you're coming down, signs of reversal at it. But that on the smaller time frame, like in this area here, you'd be looking for, okay, a rejection and a pullback on that smaller time frame, and then you're looking for that entry on that smaller time frame to go up here. So instead of taking a trade like this here, right, where let's say you're right, and again it becomes like a 28R trade here, by zooming into that smaller time frame, you could potentially like say it goes up here and then pulls back, you could potentially be looking at something more like this on the 15-minute with that same target there, and all of a sudden you're turning 28R into a 52R. But you're not doing it just to bring up your stop loss. See, a lot of y'all get caught up in pulling your stop loss up just because it gives you a larger risk to reward ratio, right? A better one. But what you're doing is you're actually doing it logically here, where you're looking for that reaction at those higher points of time frame points of interest, or levels of interest, right? And you're looking for the reaction there. And if you're looking to continue on that direction, you're looking for the reaction to set up the pullback. And you can watch at a smaller time frame that pullback, which allows you to get your stop loss closer to where you are, rather than such a big one here. Now, it takes a little bit more work. It takes a little bit more practice. But these are the things we talk about all the time over at the Trading Academy, right? Because this is the way you should be trading, right? But minimally, again, you can look at something. You say, oh, well, Chris, why don't we put it over here below the S1 pivot, or down here below this fair value gap over here? Well, because here's the thing. If you're breaking down, right now we've got this pretty well looking here. This is a good rally offer. We got a lot of room to go. Odds are it's probably the bottom. But if it's not, break down below this level doesn't guarantee you're going to stop here, or even here. So you take your one opportunity here and you go. And if it's good, you're good to go. If it's not, using proper risk management, you only lose 1%. But now okay, I got to see how this is going to work out here, so that you can find the real bottom. And then instead of having to get in here, you can get in way down here or something, maybe with a tighter stop loss, and you get a much greater return. We've shown this multiple times in our weekly, we train 3 times a week. We do a live training 3 times a week on Mondays, Wednesdays, and Thursdays. And, I talk about this constantly. I show our members why. And what it does is, initially, y'all are scared of losing money, right? Y'all are basically scared of losing money, right? This is what most traders go through, is this, oh my God, I'm scared to lose money. And so we teach proper risk management, and then I go through the motions and show y'all, listen, yeah, you may lose on this particular trade, and you lose 1%, and you could have got, if the trade worked out, you might have got, say, 5R, right? But you're losing 1. But in losing 1, if it sets up the better trade a little bit lower, all of a sudden maybe you're looking at 12R instead of 5R. So even when you subtract out that 1, you're still going to make 11. And on the previous one where you were scared to lose money, you were only going to make 5. You see what I'm saying? So yeah, losing money is okay as long as you're doing it intelligently, because you are going to lose money from time to time as a trader. And the newer you are, the more money you're going to lose, and the more often you're going to lose it. That's the absolute only guarantee there is in trading, guys. This is why your exit is the most important thing. Whether your trade is right or wrong, your analysis is right or wrong, your exit is the most important thing, not your entry. Okay? Because your exit, especially when you're wrong, determines how much you're going to lose. And all you control in trading is how much you lose. So if there's one thing you take away from today, is let it be that your exit is more important than your entry, a lot more important than your entry. And if you can understand what I just said there, then that will encourage you to use proper risk management, set your stop losses correctly. And and your risk management properly, right? Let me see here. If alts see a 2 to 3x rally, how will Bitcoin potentially run up to 120K, then back down to 100, affect alts during that correction? Would alts just have an interior wave pullback during that correction? Well, you have to remember, most of what is driving Bitcoin higher is not your crypto bros that are cycling in and out of Bitcoin into your alts. That's what it's always been in the past. That's why we've always had all, Bitcoin goes up and then it pulls back. And when it pulls back, then alts go up, right? Because money's rotating out of one into the other. Now we have a pretty constant bid on Bitcoin through ETFs, right? Through big companies like Strategy, like 21, like, all these companies, Strike, all these companies coming in here, right? And they're buying up Bitcoin and, everybody else. And so you've got almost a constant bid on Bitcoin, which is going to keep Bitcoin going higher. So alts don't necessarily have to wait for Bitcoin to do a thing before they do a thing, right? And this is something I talked about 2 Januaries ago, 2024, when the ETFs first launched, about how this cycle was going to be different for alts and Bitcoin, that we were going to see alts continue up, but likely in sectors versus everything alt season that you guys are used to. Now, I may still be wrong. There may still be an alt season at some point, but it won't be for the same reasons it's been before, which has been money cycling out of Bitcoin into there, so Bitcoin pulls back. We would still likely see Bitcoin moving up with it. So I think, your question, Troy, I think is more attuned to the way things used to be rather than the way they may be today. So I don't tend to, when I'm looking at alts, I don't tend to pay attention to what Bitcoin's doing as far as for what alts are doing. I look at, like I'm showing you here, I look at the, the counts and the charts and the pivots and, the pullbacks and all these things to figure out where we may be. And then, I trade accordingly. And so I don't sit out here and go, oh my God, Bitcoin's doing this, so alts have to do that. Especially not this time. We did it a lot more previous cycles, but I have not done that at all, not once during this whole cycle. Precisely for that reason. Because if you have bidding for Bitcoin outside of your normal markets, right? So basically dark pools, basically Coinbase, right? He's got 2 people, one of them selling to the other person, and Coinbase custody the whole thing. You're not going to see that reflected in the charts, right? So that's the one thing. And then the second thing being the other bid for Bitcoin comes from those ETFs, which are continuing to just gobble it up. I think IBIT's at something like 74, 75 billion now. Just made it into the top 25 ETFs worldwide in like a year and a half, guys. I mean, that's absolutely insane. But that's a different bidder than who was, previous cycles coming in. That's not your crypto bros, right? Most of that. Most of the people that buy ETFs are not buying them to then, Bitcoin ETFs aren't buying the Bitcoin ETFs to then sell them and then send into alts. So there's no rotation happening that way generally for those. So yeah, I would just learn to pay attention to the specific charts and work with that. And then that way, if things do happen where Bitcoin pulls back and alts go up, okay, so you're fine there. But if it happens where Bitcoin's going up and alts go up with it, you're not keeping yourself out of the game because you thought Bitcoin had to come back down in order for alts to go up. Does that make sense, guys? So yeah. But anyway, so that's kind of what we're looking at. Sui's a big one we've been watching, and I'm liking the setup here. We'll see if again, low volume node here. We're right at the top of that low volume node. Basically just swinging that low, sweeping the low right here, which is the same thing, again, that we did on Bitcoin right here, right? The low volume node, sweeping the lows right here. You guys have to forgive me. My voice is really dying here. So Wednesday, I was supposed to be on Scott's show, and we had an issue with our internet here. Apparently, one of the fiber lines was cut. So I finally logged on. I finally logged on the show right after he logged off. I was trying to make it, it just couldn't do it. But anyway, I had some charts that I was looking at. And so here's some of them right here that I was going to show this Wednesday, okay? And so again, basically same idea, 5 up, pullback, right? Now in this case, unlike in SUI, we actually have what would be a flat correction. So 3 waves down for A, 3 waves up for B, 1, 2, 3, 4, 5 as an ending diagonal here. So we kind of hit this fair value gap right here on the daily, right above this significant area of support and resistance right here. And so, again, and with this, by the way, we've almost, let me see here. Oh, we do have bullish divergence here. That's great. Okay. So we've actually got bullish divergence here on the daily. Yeah. So we got that off this low here. I think there's a good chance this goes up. If you can break out above wave 4 here, which just so happens to be at the monthly pivot around 0.173. Impulsive break, well, I mean, just even breaking out above that, here's a wave 4, would signal that the low is likely in. Break out above wave B at 0.2572 is going to add confidence to your count. That gives us then, if we go from there, and we don't actually go down to the 70.5, which is at this red line, if we just go from here, minimum expected wave 3 target up here at about 0.73, right? So again, as I said, about a 200% price increase from the wave B, right? Wave B is 25, 73, almost 75, right? So this right here is CETUS USDT. But I'm liking it there. We do have volume picking up in this area. So we just want to see that follow through. But those would be the 2 levels I'd watch for confirmation. Slightly more risky getting in on a breakout above, 1729. Less risky getting up here. But of course, the less risk you're taking on, the less profit you're going to make, right? And so this is something you have to understand, not just in trading, but in life, right? If you're going to take on more risk, you should always demand that there be a greater return for you if you're right. And it's no different here in trading. If you're going to take on less risk, you need to understand that necessarily you're going to get less return. That's the trade-off, right? That's the trade-off. By taking on less risk, especially in trading, you're waiting for more confirmation, which still doesn't guarantee you're going to be right, but it makes it more likely than the lower entry. Does that make sense? Let me see here. Mr. Awesome, what's up? Hey, Chris, just wanted to say all green week on live trading this week. TWC really helps. It's incredible. Love it, man. I love it. We do this live trading, guys. I don't know if you know. We do live trading. I trade with the students there. I always schedule it for an hour, but we're usually in there for a couple hours. But it's Mondays, Tuesdays, and Thursday mornings. And right now we're trading the S&P micro minis. Micro E-minis there, and just, again, you can take the trades with me, and that's perfectly fine. But the real reason I do this is because there's a difficulty, right? When you're learning how to trade, you have theory. You all learn theory. You read books and whatever, and it's always with perfect charts, right? I do that too. I set that up the same way because it's the easiest way to explain the concepts, right? But when you get to the market, it rarely looks like those perfect setups, right? So there is a disconnect. There's a jump you have to make as a student of trading, and most people don't make it, which is why they give up, where you have to make that transition from what you're learning in theory to how it actually works on the charts, right? And so I attempt to bridge that Mondays with Wyckoff, Wednesdays with price action, and Thursdays with Elliott Wave, our live trading our live training sessions that we do then. Live trading is the next step. So, I talk about charts that have already progressed and how they may progress, right? So again, trying to get you from those perfect charts in the courses, in the theory, to what the reality of is, which is usually a bit more messy. The live trading that we do on Mondays, Tuesdays, and Thursdays is meant to take it the last step, and that's live, what's going through your mind as price action is happening. And so we're usually sitting around the 1 minute time frame when we're doing this. So it gives me a lot of opportunity to discuss what I'm looking at and why. And you'll see it changes as it's developing, because you have to get a concept in early and then just be open to that maybe not being correct as it does. And we talk about stop losses and entries. And even when we take a trade, I'll usually look for other entries where people can still enter in case they didn't take the same entry I did, right? But we, continue to discuss the importance of risk management and how that works. And because I use prop accounts for that, I'm able to talk also about if you are trying to get funded by a prop firm, here's the things you have to pay attention to as a trader, because there's some things it's that are more than what you do if you're just trading your own money, right? Because they have rules. They have rules on consistency and risk management, all these things that they're looking for in order to fund you. So you get a lot of education through that, even if you don't trade it, just listening in. And I record every live training session that we do 3 times a week. We've got hundreds and hundreds of hours because I've been doing this for like 4 years, 3 times a week. So we've got all that you can search through and look through. And then I also record every live training session we do and make that available as well. Because we do have a lot of members from outside the US. We got members from down in Mexico, South America, Canada, the UK, the Netherlands, Czechoslovakia, Switzerland. We've got a few from Australia. And Australia is a crazy time. I've got Alvin. Alvin joins us in the live trading. And it's usually like, because we do it first thing in the morning here around 8:30 a.m. Central, 9:30 Eastern. And it's usually about midnight, 1 o'clock in the morning when he's joining us. But yeah. So that's what we do there. But anyway, Mr. Awesome, absolutely fantastic. I love to hear that. We work on discipline. We work on being consistent, because as traders, you may not understand this, but the thing that determines whether you're going to be, one of the things that really kind of determines whether you're going to be successful or not as a trader is, are you consistent, right? And we're lucky that we have students that come up and, are talking, oh man, Mr. Greedy's showing up, on this, and we can talk through it, right? Because these are real things you go through as traders. And, and we talk about the importance of, listen, Mr. Greedy's saying, don't take that partial. And I'm saying, well, if it was in your plan to take the partial, then take the damn partial. And you take it because it is more important to be consistent than to make changes in your plan on the fly when you're trading. That consistency is what's going to get you profitable over time. And that's what you're looking for. You're not looking to be profitable on just one trade, guys. You're not looking to make every single penny that you can make out of a trade. Those are all losing games. You're looking to two jobs as a trader. One, use proper risk management every single time you trade. If you can't do that, you don't need to be trading. I'm telling you now. Okay? Think of James Wynn, that person online that round-tripped all that money. Absolutely stupid. I'm telling you, it's stupid. Yeah, I can say that. I've been doing this 31 years. I can damn well say that. The number 2 thing you have to do as a trader, your number 2 job, is to consistently lock in profits. Notice, I didn't say it was to get every single penny of the movement. I didn't say it was to catch the absolute low and sell the absolute high. I didn't say that. It's just to consistently lock in profits, because trading is a marathon. It's not a sprint. It's not about one trade. It's about the culmination of your trades over time. That's how you get rich. Not one trade, folks. Not a 500x on a single trade that you lucked into. Because the odds are, if you do that and you happen to somehow lock in those profits, you're most likely going to lose it all pretty quickly after that. Stories all over the internet, all over social media about people that are round tripping, 7 figures in a cycle on crypto. It's absolutely, if they made 7 figures and then round tripped it back, guess what? They're not a good trader. Everybody's like, oh yeah, they are. They made 7 figures. Yeah, but they didn't keep it. They didn't keep it. If you can't keep it, you're not good. You're lucky. Does that make sense, guys? And so I say this so that reality can kind of hit you, so you can be better prepared on the things you need to do to be successful as a trader. It's not what everybody else is telling you out there. Well, at least not what everybody else with like less than 5 years of the markets is really telling you. But, listen to what I'm telling you. Listen to what Peter Brandt tells you. Listen to what Bollinger tells you. John, we've all been in the markets for decades, and there's a reason we are, because we figured it out. And you'll notice it's nothing like what you think, right? The way I am today is 180 degrees different than what I was when I first came in. I came in just like everybody else. But you had to get away from that to actually become successful as a trader. And I'm telling you what, it's a damn good feeling to be successful as a trader. We've got a guy, Sats McGee, who trades with us. He's been with us about 4 years. I was just talking to him the other day. I said, how long have you been with us? He says, man, I think 2021, so 4 years. I said, okay. But he said, listen, man, he says, this is the third year that I'm making more. And he's saying this right now in June, that he's making more in trading than he ever did at his day job. And he was a financial planner. So, it wasn't like he made little money. So, if you've got to wonder, well, but does what Chris is talking about here, what he teaches, does it really work? Yeah. We got multiple stories like this. People come in and do it, right? But it doesn't happen unless you make it happen, right? So whether you're coming into us or anybody else, you have to actually put that stuff to work. You have to get outside of your head. You have to do all those things so that you can have a chance. Your biggest enemy as a trader is yourself. It isn't Wall Street. It isn't crypto whales. It isn't anything like that. It's yourself. And that's why I always say trading is simple, but it's not easy. If it was easy, we'd all be doing it successfully, right? But barely anybody is. Does that make sense? So, anyway, Peter says Sats is the GOAT. Love that guy. Yeah. But we got a core group of traders, a great group of people, guys and gals in there that are trading pretty much every day and discuss a lot of their trading, in the way. But we got a lot of people who also don't discuss anything ever. They're busy at work. They live in another time zone that makes it difficult to attend live. So they watch the recordings, stuff like that. So, but I try to make it as easy as possible for you to get your questions answered for you to learn. That's the goal. So anyway, yeah. Let me see here. So this is this one here. I had some other ones here. Again, they're all going to look kind of similar here, and I want to show you that. This is Michi. MICHI USDT. Again, another one I was going to show on Scott Show on Wednesday. And so here we've got the pullback, right? Now, we've done 50%. This may be complete here, but if it does pull back further, for all of these, we're looking at 61.8, 70.5, 78.6 is our levels potentially. But again, if we are breaking out, if we're breaking out above this wave 4 at 0.0428, that's going to indicate the low is probably in. Break out above this wave B triangle resistance up here at 0.0659. That's going to add confidence to the count. That's going to suggest we're potentially, like from right here, this would give us a minimum expected wave 3 target up here at around 0.4817. If it comes down a little bit further, the target will be a little bit lower down. But nonetheless, if you're looking here, again, this one actually goes up a lot more. So wave B is about 6.5 cents here. And then you're talking about a 48-cent target there because of how far this moved already, right? So this is a good potential trade here. Again, continuing to look at alts here. We've got Bio USDT. Same idea, right? 5 up, AB, ABC 1, 2, ABC 3, 4. Potentially ABC 5 is complete, or we're getting an ABC is 5, right? So we've pulled back here around 61.8, just beyond the low volume node there. If we continue further, we can look at 70.5 here at 0.053 or 78.6 at 0.049. But let's say we go from here and we go up, right? Let's say that is the low there and it's finished. Which, by the way, if you're doing Elliott wave, most of the time what you're looking for is wave 2 to terminate within wave 4 the lesser degree. So wave 4 of 1, usually wave 2 is going to terminate around that low. So we're pretty close to that right here. But again, we're going to look for that breakout above wave 4 to indicate that low is probably in. In this case, it's 0.0731. And then that's going to say, okay, the low is probably in, most likely in. Breaking out above wave B at 0.01025. I'm sorry, 0.1025. So 10.25 cents. is going to add confidence to the count, and that'll give us a minimum expected wave 3 target at 0.2626. Okay. Now that's about 150% on the rally there. So where we're at, but still, it's that same kind of general kind of a structure that we're seeing across multiple alts, right? DeFi is another one here, except this one has come down and broke down below the swing low here. Now it's possible 1, 2, 3, 4, 5 may be done here. Okay. But again, we need a breakout above wave 4 to signal the low is probably in at 0.004201. Now, on that, we don't really have a target here. But here's the thing. Most of the time when you're doing Elliott wave, your first 5 waves up will terminate around wave 4. So that'll give you your first local wave 1. So you do like something like this, right? And then you get a pullback. So you get like a wave 1 and a wave 2. So if we're looking at that, that would give us 5 waves up around 0.007880 without any overextension happening. So you want to watch for this and see, okay, is that going to happen? Are we going to get that move up above that wave 4? Let me see here. Where are we at the lows here? 2701, 2700. Yeah, so I mean, you know, again, potentially done here, looking for this break back out here. If we can reclaim this swing low, this previous swing low at 0.003190, that would be the first of hints, I think, to kind of say, okay, that low may be in there. And you could see stochastic RSI basically bottomed out and oversold, RSI reset into oversold. So you've got other things happening here which are suggesting that maybe that low is in or pretty close to it. So you, on something like this, you can zoom into your smaller time frames and say, okay, what are we setting up for in these smaller time frames? You know, is this maybe 1, 2, 3, 4, 5? Or even 1, 2, 3, 4, 5? ABC here, we're getting the breakout higher, right? So now you're on the 1 hour and you go, okay, well, as long as this low holds here, breaking out above this swing high here will be an even sooner hint that maybe that low is in. 0.003102. But again, it comes out with that whole find things on the higher time frame that suggest maybe, you know, a reversal may be forming or a bounce or something, and then zoom into the smaller time frames to find your entry. Stop just trading on the small time frame and trying to say, okay, well, I'm just right there, or whatever time frame you're on. Most retail traders, they'll just like look at the 15-minute to trade, or they'll just look at the daily to trade. Well, always zoom out a few time frames. Okay? If you're on the daily, you should be looking out to the weekly and the monthly. What are those higher time frame points of interest that you should be looking at that'll give you a better understanding of where you maybe should enter on a daily basis? Don't just enter on the daily because. If you want to do a 1 hour or 15-minute, at least the 4 hour, but preferably the daily. Find those higher points of interest, higher time frame points of interest, and use those as your initial areas of where you're going to start looking for entries or for setups to begin for potential entries, whichever direction you're looking to go. Okay? Let me see here. Chris, how far do you think we will pull back on Bitcoin after the V-shaped recovery? What V-shaped recovery? What this? It depends on how far it goes. As I was saying, we'll look for either a strong rejection here at the pivot that potentially sets up a move down to 96, or ultimately we'll look for a breakout, impulsive breakout and close above the weekly pivot here that gets us this pattern target based on the height here up around 119.809. Now, we can get in here to talk about a whole bunch of small time frame stuff, but that stuff's bound to change. So me talking about it here doesn't really help anybody. I can talk about that stuff more so in the Trading Academy where, where I'm updating our students multiple times a day. But for here, with this once a week thing, I mean, that's basically what you're looking for. If you end up with 3 waves up into this pivot here, and then you get a rejection below the second wave, you should be looking to go short down toward that 96. Because, 3 waves is corrective, right? So Let's say we went here, A, B, and C, and then got rejected and dropped back down below that B wave. You know, if we did something like this. If we went A, B, C, and then dropped here, back below this wave B, most likely, now again, there are no guarantees in trading, but most likely, that's going to have us going down to that 96 area. Now, why might this not go down? Well, if this is going to be a 1 and then this is a flat, break out higher, right? It'd be a 1 with an A, B, C. It's a 2. You go higher. So again, you know, nothing is guaranteed in trading, which is why risk management, proper risk management is so dang important, right? Let me see here. So let me see. Let's get back to where we were at here. Here was another one I was looking at. JUSDT. Looks like it might have a 1, 2, 3, 4, and potentially a 5 done around this S1 pivot here. We'll see, right? Now this one, we've got a bit more room here with this descending resistance off that wave 4. So if we got a daily candle impulsive breakout and close above this descending resistance, that would be my first hint that maybe it's complete here. You notice that the RSI and stochastic RSI are reset into oversold. But again, like everything else, if you know, breaking out above wave 4, in this case that's 30 cents, is going to be the first real clue that that low may be in. Why is that? Because if we break back up through wave 4, then that means wave 5 is complete. It can't subdivide any smaller. And so that tells you then you have 5 waves complete. Now that doesn't guarantee you're going to break out to a new high. You could just do an ABC correction and then finish lower, but you know, that's what we're looking at. Now, with us being here at, you know, 14, 15 cents, the odds are heavy that if we get this breakout here, that is going to be the low. Right? So, you know, again, another one where we're looking where there's real good potential on that. So you want to zoom into a smaller time frame, see if you can find a reason for why that may continue on that. Hype USDT. Let me see here. So looking at potentially, let me get this down here. Looking at potentially a 1 and a 2 here. Okay. So we want to break out above, well, your initial, like we're doing everything else here, would be this one right here at $35 and basically 66 cents. Break out above that, the low is probably in. Break out above 37,191, that's going to add confidence to the count. And we can be looking at minimum expected wave 3 target up here around 46.66. Locally right here, you know, maybe a 1, getting that 2 on that pullback. So we're just looking for this to hold this support here. We did get a pullback of how far? We got a 70.5 pullback. That's my favorite pullback right there, institutional level. And so I like it. I like where it's coming at here, where we had the previous supports and resistance. So we just want to see this continue up and break out higher. Keep us going with that on hype. Right? XVS. We're kind of sitting here with what is potentially 5 waves up. And, you know, again, we may be at the low here, or we may pull down toward this $5.40 level at the S1 pivot on the weekly. But if we're breaking out above wave 4 here at $6.18, that's going to signal that the low is quite potentially in. And that will be with a sweep. I love it because it would be just a sweep here of that previous swing low. So you got a bullish SFP. Or if you're doing, you know, Wyckoff here, just have your range. So you get your spring down here, you rally up, you get a pullback most likely, and then you'll get your boom up. So you get like a wave 1, wave 2, wave 3 is your participation wave. It's your jump across the creek in terms of Wyckoff. If you don't know what I'm talking about, join us. Join us at members.texaswestcapital.com. Use the summer 2025 promo code on the annual and get it for like $553 for the year. It's like, I think it's less than what? It's less than, what is that? Just like $46 or $47 a month. Right now, you can get in monthly at $97 a month. But again, as if you're in here late, come Monday, that's going to go up to $179 a month. If you're in at $97 though, and you keep your auto renew stays good, you'll keep getting the $97 a month, or whatever your annual is. I know some of our members have they took advantage of specials we had through the years, where they get a certain rate for their renewal. Yeah, as long as you continue to auto renew at that, yeah, you're going to continue to get that rate. So it pays to pay attention. If you want to join us when I talk about these specials, we rarely have them anymore. I haven't had one in forever. There hasn't been a discount in forever, but yeah. So anyway, but you can learn all that about the jump across the creek and all that, and how that aligns with what's going on with Elliott wave and price action, by joining us. Let me see here. Technically, are we going to be able to accumulate more Link at $10 or under? Where are we at on Link? I updated this morning, but I don't remember off the top of my head. Link's one of those charts I update daily. I got like 15 or somewhat charts that I update every day. Stocks, futures, crypto, whatever for our people. I don't think there's a good chance of that. I've got that as a 1 and a 2 here. And then locally here as a 1 and a 2 on this pullback, 61.8%, almost exactly. Supported the S1 pivot on the weekly. Again, if we can get a breakout above wave 4 here at $14.48, that's going to signal the lowest probably in. Breakout above 17.16 is going to add confidence to the count. And if you had gotten in this morning, back here, just to get up to the resistance, the top part of the range there is almost a 5-hour trade. If you got in down here with that stop loss just below the swing low and you're going up to the wave 3 target, that's a $22.78. I mean, a 22.78 hour return on just the wave 3 there. But yeah, I can't guarantee it's not going to go down there, but we've got a capitulation on the low here with this volume at support. We can get 5A, then B, and we can get 5 more down for C. I think the odds are more in the likelihood that we will continue off the low. But again, no guarantees, right? That's why with these two particular trades, I've got the stop loss set up right below the swing low. Because if we break below there, that means what I think is happening here isn't happening. And we could just go a little bit lower here, which I would next look at that S1 pivot here, which is right around $12.12. That would be the next place I'd look on the way down. That's almost 70.5, but it could continue on 78.6, 11.46, or hell, it could sweep the low. But right now, it looks to me like this is a pretty good setup. So we want to see, can we kind of get that higher there? Chris, does the summer 2025 keep my annual the same for years coming? I wasn't going to do that. I was just going to do it for the first year here, but I'm going to change it so that it is consistent. Since we're going up in price, yeah. So yeah, if you got the 2025, if you use that to get your annual, we're going to keep it at that price, guys. There's no reason just to do it for the first year. Again, we'll set that up forever. But there's only 20 seats total in there, and a lot of them have already been bought. So if you're even thinking about it, you might want to jump on it before it's not there anymore. If you go to do it and use the code and it doesn't work, it's because there are no more openings for that. Because again, I only left 20 on that. But since there's only 20, yeah, I'm just going to make it so that it's forever at 553, which is really insane. It's good at the price we have it now, but it's really great at the price we're going to, right? How long after the launch of these Bitcoin treasury companies can you then chart the price? 400% moves and not a lot of price history make it rough, right? MTPLF has gaps all over the chart. Any advice? Well, let me pull up that chart and let me see what you're talking about so I make sure I'm getting a good understanding. What'd you have there? MTPLF. Okay. Whoops, MTPLF. And by the way, guys, I would suggest that you do what I do here. I always open new charts because that allows me to keep what I've said previously always, right? So I don't know, I hear about people sometimes, they're like, oh, they'll go and remove charts and erase charts and all that. I don't do it. If I posted something and we've got years worth of stuff in TWC, you can always click on that to bring up the chart from that time. Because I update the charts every week usually. Sometimes they'll run a couple of weeks, but it's because I get lazy. But the Bitcoin chart I update every day. There's always a new saved chart. So there's always, proof of what I've said. You don't ever have to worry about me, going out and say, oh, well, I didn't say that, and erasing the chart or something like that. Because it's always there in TWC. So I don't know who else does that, but I do that. Okay, so your question here is how long after the launch of the companies can you then chart the price? Well, you can continue to chart it, right? So if I'm looking here, I'm going, there's a 1 and a 2. So I'm starting already at this idea. There's 1, there's 2 up here, right? We'll say we'll do it like that. And then right here looks like a flat. So to me, this looks like a 1, A, B, C is a 2, interior 3 coming up, right? And so, already from here, from the beginning, if this is a 1 and this is a 2, minimum expected wave 3 target right here, secondary target 200%. We got to move almost 200%, a big move back. I'm thinking this is 3 and this is 4. We'll measure it in a moment here, but I'm thinking this is what we're looking at. And I'm thinking that we may have something like this here coming in, right? Excuse me. Or maybe even 3 up here, 4, and then 5 up here. But nonetheless, this looks like a 1, a 2, and a 3 here. Now the pullback, we're looking for at least a 38.2. That's our first general pullback target for a wave 4, right? Oops, a bit lower there. All right. So 38.2 is your initial wave 4 target. 50% is your second. We almost hit the 50%. I'm pretty sure this is an A, this is a B, that's a C, that's wave 4. So now what do I do? Well, the first thing I do is I just grab the height of wave 4. And that 1618 is usually my generic pattern target, $31. Okay? But as always, we're looking for a breakout above wave B to add confidence to the count. So we got to get a breakout above 1319. If we can do that, then the pattern target is up here at $31. Now, what was I saying about the about those wave 2s, right? They were about 200% on the alts. Well, this one right here, $13 up here around 31, becomes basically about 150% on that rally. Now, it can go higher, it can go lower. A pattern target is just that. It's a price action pattern target based on the height of the pullback. More times than not, you're going to get around that 1618. It's not an extension. This is your fib retracement tool that's marked with the 1618. Okay? So it is, this thing's grabbing on here. So it's this tool, not this tool. This tool, this extension tool, is what we used for wave 3 here. But for the wave 5 target, I use the retracement tool with the 1618 added on there, because all that's saying is your wave 5 is 161.8% of your wave 4. That's all it means. But you have to do it the right way. Otherwise, you use this and get it all screwed up. Yeah, so if I'm looking at this, I would be looking up here around $31. Now, again, it could go higher. Doesn't have to get that high. Usually it'll get around there, though. So when I'm looking at MetaPlanet, that's what I would be looking at. That's how I'd look at it. It's to me, it looks pretty clean. Looks pretty good there. Let me see here. Yeah, this may be the 3 and the 4 here and up, but nonetheless, 1, 2, and then 1, 2 gets us up there. And so again, your 3. So when you use Elliott Wave, the two most important tools you have are your retracement tool and your extension tool here, because they give you the generally expected areas for price to move toward. And so that gives you targets. Doesn't guarantee that it's going to hit them or it's not going to blow past them, but it gives you generally expected targets, historically where the targets tend to be, more or less. And so that gives you a place to start, and then you can order. So like, again, if you've got this wave 3 and you're looking up here, that's great. And then you get a 1 and a 2 here. Well, you can go, okay, well, 1, 2, where's my 3 here? And you can kind of, either get into a smaller trade or you can mark your movement as it continues through it. Does that make sense? Yeah. Peter, what'd you say there? Y'all need to jump on my offer. You get so much alpha, so much material to learn from. Community is outstanding. I'm glad you said that, man. I think so too. You don't have to be special to become a good trader, guys. I'm nothing special. But Chris, you got all this education. And I've heard that so much because, I have a couple master's degree and a law degree, right? But those probably hinder me more than make it easier for me. I'm lucky enough to have friends that haven't even finished high school and are living, I've said this before, they're living the life that you dream of when you think about trading and how successful you could be. And they didn't even finish high school. Because trading isn't about book smarts. Trading is about understanding yourself and being open enough and coachable enough. That's the thing, right? A lot of people never get to that point where they can fully give up control and go, okay, well, tell me what I need to do. Tell me how I need to do this. A lot of people will give lip service to that, but then they won't do the thing that they have to do. And that's part of being human. But then they'll go and they'll blame whoever it is. But it's never any, it's always, generally speaking, begins and ends with you, right? Anything we do in life, good or bad, begins and ends with us. Yes, you can have influence from other people, that's fine, but you are ultimately the one making the decisions. You have responsibility in the actions that you take. And this is so important because once you recognize that, it frees you as a human being, guys. It really does. Because then you notice that you've spent so much of your life always living in the past. You're never getting to move on from whatever the issue is, whether it's the person you were dating, a boss at a job you were at, trading, whatever it is. The thing that really tends to hold you back is this inability to let go. And if you can't accept that you have a responsibility in the actions that you're taking, the reason why that keeps you from moving forward in life is because you don't change your behavior. If you say, okay, it's my fault, I've got this significant, part of this because I made the decisions. Well, then you can go back, okay, well, now all I have to do is start changing my decisions, right? And you can learn from your mistakes then. And it really is that simple. But like trading, life is simple, not easy, right? We all struggle in life, guys. We all struggle for this, really, ultimately for these same reasons that I'm talking about right here. These are the big, generic, overarching reasons why we struggle and why we fail a lot in life. And it isn't because of somebody else, it's because of us. Because we don't do the things we do that we need to do. We're holding ourselves back. We're not allowing ourselves to accept responsibility for our decisions that we make, which means we can't do the next step, which is figuring out where we made the mistake and then changing that so we don't make that mistake again. And because we don't do that, we end up repeating the same mistake over and over again. And we continue to blame everybody else. And it's just a vicious, never-ending cycle. And you don't get the things that you want to get out of life. I didn't wake up understanding this, guys. This took a lifetime of fighting against the things that we're taught, the way society generally expects us to act. Most Western societies tell you, they don't just say it's okay to blame somebody else. They tell you, listen, you should be blaming somebody else. It's not your fault. In the US, one of the biggest realities of this is no fault insurance. What do you mean no fault? I'm driving down the road and some yahoo sideswipes me. I didn't run a red light. I was doing the speed limit. I was looking both ways, whatever. And he comes speeding through and side. You damn right it's his fault. But I do have a responsibility in that, right? My responsibility is the decisions that I made leading up to that point put me there. It's not my fault that he hit me, but it is my fault that I am there at that point where I could get hit by him. Does that make sense? I'm telling you guys, if you can understand this, it will change your life. It will change your life. Very few people ever take this understanding. So get out there, guys. Don't be afraid to take responsibility for your actions. If somebody does something to you, it's not, they have responsibility for what they did to you. Your responsibility comes in the form of the decisions that you've made in your life leading up to that point that you are there and have been able to be taken advantage of by that individual or whatever happened. But again, when you recognize, well, I do have responsibility, you can forgive yourself. You can figure out the decisions that you need to change to move differently, and you can go on and you can continue to expand and get better. Reach the goals that you want to reach. Every single thing I teach in trading, guys, is directly applicable to life. Absolutely 100%. And one of the biggest things that I get, one of the things that makes me the happiest is when our members say, man, Chris, I love what I've learned here is trading everything, but even more so, I love that you're teaching how to apply it to life because it's made my life better. For me, that makes me feel freaking great because most people won't ever get to that point. Even if I sit here telling you, most of the people listening in right now are shaking their head, whatever, maybe saying comments and making fun of me, whatever, right? That this is the way most people are, though. Until you change your mindset, your life will continue in the trajectory it's at. Okay? So often, people will leave a comment, not often, but sometimes people leave a comment under the videos. They'll be like, get off all the generic stuff. What they think this is generic, right? Get off all that mindset stuff and get to the charts. Thank you for proving my point. You're exactly the person I'm talking about because you don't get it yet. And you probably won't get it. I'm not saying you can't get it. I'm saying you choose not to. You choose to be willfully ignorant. Man, guys, you got the opportunity with the internet and all these things going. You have the opportunity to understand from really successful people how they became successful. Really listen to them. I'm not just really even talking about me. I'm talking about other people out there that are infinitely more successful than I am. Listen to what they tell you. Look at what they're saying. How do they approach life? How do they approach choices, decisions? How do they approach responsibility? And you'll see that most of them, this is the way. Not everybody, but most of them. And so I always say, if you want to learn how to do something successfully, mimic yourself after people who are doing it successfully already. Okay? But yeah, so anyway, and if you think I'm just blowing smoke up your rear end, guys, here's the thing. This is my 31st year trading. So I've got real world experience in trading with all this, right? Also have a master's degree in psychology. So, I do have some educational background in this, right? None of that's to say I'm better than you about anything. It's just to say, listen, I've learned to understand this. And I want you to understand it as well because I want you to be successful. There's nothing that would make me feel better than you telling me, listen, that thing you were saying that day, it really hit. And oh my God, my life has been getting better ever since because I really took it to heart, right? You don't even have to say that publicly. I do that because it makes me feel good when people say that to me. That's what I'm getting out of it. I don't believe in people doing things just to do them. I believe we all have some reason deep in us why we do things. And that's okay. That's not a bad thing. Don't let anybody tell you it's a bad thing. Because if you didn't have that thing inside you driving you to do it, you wouldn't do it. The guy who created air conditioning, I live in Texas. The guy who created air conditioning, do I care that he did it to make money? Hell no. Thank you, sir, for doing it. I get to live in it. When it's 110 degrees outside, I get to enjoy 70 or 65 degrees in my house. I appreciate you. Indoor plumbing, same idea. I don't have to go to a sweltering outhouse, 110 degrees outside, 125 in the outhouse. I don't have to do that. I don't care that you did it solely because you wanted to make money or you wanted to make a name for yourself. I love that you did it. Does that make sense? So don't let people ever make you feel bad because maybe you do something for some other ulterior motive. It's something, because it makes you feel good, because you get recognition, because you make money, whatever. That's fine. The fact that you're doing it and it's benefiting somebody else, that's all you need. That's all you need. Okay, listen, guys, I'm going to get out of here. I'm surprised my voice has held up this long. But hey, listen, if any of this resonates with you, we'd love to have you join us. Members.texaswestcapital.com. Come join us in. Jump on the annual if you can do it. It's $553 with the discount. Right now, the annual is usually $970. It's about to go up on Monday when the monthly price goes up from $97 to $179. So, and like I said, Jojo was asking the question here earlier, is that going to be forever? Yeah. I initially intended it just to be for the first year, but because I only have 20 at that price, if you're one of those 20 that gets it, yeah, as long as you want to continue to renew, if you decide you want to stay with us another year or a couple of years or whatever, you'll continue to get that low price, even though that's going to be less than half of what the annual will be on Monday. So anyway, do that. And if you get a chance, guys, you're looking for some good Bitcoin-related fiction, jump on over to Amazon.com/author/Christopher Franks. Look up Forked Nations, FORKED NATIONS. I think it's a really great book. I wrote it. I've put off. I had a Cold Wallet Protocol was supposed to come out, but because it took us so long to get Forked Nations out there, I've kind of put that probably here in the next week or so. We'll release that. But it's the first in tetralogy, so it's a 4-book series. Cold Wallet Protocol, espionage, spies, NSA, Bitcoin, AI. A lot of really good stuff. A lot of fun to read. But you'll be able to find that there as well, all right? But everything else ahead of here, guys, if you've gotten anything out of today, I hope it's that you do have responsibility for the position that you're in. You have some kind of responsibility in that. And from that, be okay with it. Recognize that maybe you didn't make the greatest choice. That's okay. One choice does not define you. Use that to understand what you could have chosen better, and then make those decisions in the future. And you see that you have a lot of control over your life. Okay? And your trading. As always, remember the only thing you control is how much you lose. Please keep working on risk management, y'all. I hope you have a great weekend. Trade safe. And if you are signed up for the market breakdown, that'll be coming out later tonight. Applied Socioeconomic Theory at socioeconomictheory.substack.com. That'll go out tonight. And Trader's Edge Daily at tradersedgedaily.substack.com. Those go out every morning. It's like a 60-second quick read, if that long. I give you one thought every day about trading that can help make you a better trader. All right. So yeah, Fibbo says he guarantees he'll be with us next week. He says he's already put it into the calendar and everything. Like I said, he just couldn't be here today because he got called into work. He actually had to go into the office. And so he couldn't do the live with us. But he should be back here next Friday, all right? Y'all have a great weekend. Trade safe. And man, oh man, I look forward to seeing y'all next week, or hopefully over at TWC. If you go in there, tag me in one of the chat areas and say hi, or just send me a DM. Respond to the DM I send you when you sign up. Just let me know you're there. Love to meet you. All right, take care, everybody.